Hey everybody, this is Anton from Intellcre, and welcome to this quick tutorial where we're going to explain how to use the expenses section in the new analysis form. So before starting an analysis, we're prompted with boxes where we can upload financials, our T12s, OMs, rent rolls, profit and loss. If we haven't done so already, we can always do the uploading in the section. So this is how the section for expenses, how it looks like before it has any data in it. So there's a couple of ways how we can get the data in. We can do the manual input of the data using the type in expenses here. So let's say we have our utilities. We can provide the current value for the utilities, let's say $2,000 per year. We can work with different bases, so we can work on the annual, monthly, per square foot, per unit basis, or on the basis of percentage expressed using a gross operating income or the percentage of the property value. We also have our pro forma expenses here that can be the same or can be different from our current expenses. And of course, for each expense item, we can use a different basis. And we can also set the defaults if we like to work with certain expenses using certain bases. We can set the defaults in the settings of the platform. Taxes, property taxes are at the very top, are sort of separate. And the way the property taxes work is we can either just provide the annual value, so provide our last year's taxes, or if we don't know what the taxes are, we can estimate them using price estimate for the property. And we're going to show this functionality once we show the auto estimate feature. But ultimately, at the very bottom, we see our expense totals, current and pro forma, expressed using all the mentioned bases. And we can also see what that looks like in terms of as a percentage of GOI. We can tap into some advanced options for the expenses using the enable advanced options here. And one of the options is if we want to have separate growth rates for separate expenses, we can toggle on the per expense growth rate. And now we have a growth rate for every expense individually. So let's say the utilities would be growing 8%, but the other expenses would be growing at 3%. This is how we can model that scenario. We can also offset our pro forma expenses by a number of months. This is applicable in cases where either our property is undergoing a major renovation or is not fully operational, or we're modeling a ground up development where the current operating expenses basically are not there, and the pro forma expenses are going to start kicking in at a later point down the line. So that's what's included here in the advanced options. And let's get back to resetting this section. So I can reset this section the same way I can reset all the other sections on the top right side. And now let's look at the auto estimate expenses feature. So in cases where we don't have the data around the expenses, and we want to quickly run the deal through the platform and to see how sort of do a quicker and dirtier version of the underwriting, we can use the auto estimate expenses feature here. And what that does is it looks for live operational data for similar properties in the same market, and it's using that data to basically come up with estimates for what the individual expense categories would look like. So we can use this if we don't have data on our current or pro forma expenses. Now let me reset this section one more time and show you the third way how we can get the expenses in. Of course, this is the most convenient, the quickest way to do this. So we can just upload a T12 either in a spreadsheet or a PDF format, and we can just have all the data automatically imported into the form. And so this is what we want to do every time that we have such document handy. And of course, for property taxes, there's several ways to work with the property taxes. If we know the last year's property taxes, this is the number that we're basically looking at. If we don't have this information available, of course, then the platform can provide an estimate looking at some estimated value or estimated price for the property, and then looking at the millage rates or the effective tax rate in that market, and then basically solving that equation for us. So figuring out what the taxes are going to be. Another thing that we can do if we need to model taxes with some more flexibility, we can enable advanced tax modeling. And in this case, we can play with various reassessment scenarios. So if I choose year-over-year assessment to be year 2, I can see how the assessed value is changing for year 2. So we also have this cash flow preview here for the taxes. And we can play with other factors such as tax credits, reassessing upon sale. Of course, this is our annual tax growth rate, which is set at the legal maximum. maximum just to be on the conservative side. But that's pretty much it. So once we have situated our operating expenses, it's time to look at whether we want to do any construction or capex or renovation projects at the property. If that's the case, we're going to use the construction expenses subsection here, and in this section we can model any number of projects, either capex or renovation projects, simply by providing the project name. So let's say here unit rehab. So let's say we have some legacy units at our property and we want to model or factor in a project where we're rehabbing these units. So we provide the project name, then we provide the budget for the project. This could be a total budget or maybe on a per unit basis. So let's say this is going to be $20,000 per unit. Then we provide the timeline for the project. So let's say this is going to take 6 months to complete. And then does this project affect vacancy? So do we want to model the vacancy that is going to that we're going to have because of this project on top of any economic vacancy? If so, we're gonna use the affects vacancy checkbox here. And another question that we need to ask ourselves is there a rent premium or rent increase associated with this project? So once the legacy units have been renovated, would that basically make us be able to charge more for the rent? Or will there be a rent premium? If so, we're going to use the rent increase checkbox here. And finally, if this is not a project that we're doing for all the units at our property, but only we're doing this for a subset of units at our property, we use the 3 dots here at the end of the row, and we go to edit units. And here we see the rent roll at our property. We can filter in this rent roll. So let's say, show me all the units that are 1 bedroom. So now we have 6 out of 10. And now we're going to use another filter, show me all the units where the current rent is below 1900. Okay, so current rent filter below 1900. Okay, and so the result is these are the 5 units. So let's say these are the legacy units at our property. And now we can either assign them individually to this project or we can assign them all at once. So edit renovation for 5 units. And so now we've included these 5 legacy units to this unit rehab project. The total project budget is $100,000, 20K per unit. And we're all set. So we can add more projects. We can add a CapEx project. The difference between a CapEx project and a renovation project is that it doesn't have a timeline. So, so the cash flow for this project happens right after the acquisition. And so there's no timeline for any CapEx project. So things like adding solar panels or installing EV chargers and things like that. Now, finally, here we can choose the payment source, or where's the money for these projects going to come from, right? And we have 3 options: cash flow, working capital, or raised. Now, let me explain the difference between these three because we see a lot of confusion around this point. So when we use cash flow as the source for this project, basically, if this is a cash flowing property, there is a certain cash flow every month. The system is going to try to use that cash flow to cover the costs of these renovation or capex projects. And if at any point that cash flow at the property is not enough, then it will automatically start calculating how much working capital we need on top of that. And you will see this reflected in the value and financing section, in the acquisition and sale, and in particular in the working capital. So here we see that the system is calculating we're going to need 30-something K more on top of whatever the cash flow is going to be at the property in order to cover this 100K renovation project, right? The second option is we use working capital. So we don't want to use the cash flow at the property. We want to just take the costs, and we want to have them before or as we're doing the acquisition. We want to have them sitting in the bank account for this deal. And so when we choose the working capital, you're going to see that it's already the entire cost of the project, 100K, is already down here in our working capital, in our acquisition and sale. Now, the third option is to use raised. And now one has to be careful, because if we choose raised, then we have to manually factor in the costs for all these projects further down in the analysis. So this would be, again, perhaps in the acquisition and sale section. You see now we have no working capital. And so we either manually declare that this is the working capital that we're going to need, or we include it as an additional acquisition closing cost, or there are several multiple places where we can have this included. Of course, if we're doing certain financing to do this, to basically cover the costs, we just need to keep that in mind. So having said that, this is everything that you need to know in order to effectively use the expense section to model the expenses at your deal, at your property, and model them in accordance with what your strategy is for the deal. So if you run into any additional questions, don't hesitate to use the support button here to let our team know so we can assist you as quickly as possible. That's it. So see you at the next tutorial.